We welcome on board Amit Chadda, MD and CEO at L&T Technology. 146 points higher, led by HDFC Life, LTTS, both earnings reactions. So, Amit, hi, morning. Welcome to the show. Although your revenue guidance for FY25 does imply strong Q4, Q3 revenue growth has been rather steady for you. How is it that you would rate it? And was it really up to your mark and expectations?
So number one, if you look at it, I thought we had a fairly good quarter actually. If I look at the numbers, 9.5% year on year in rupee terms. If I take dollar terms, constant currency, 8.7% year on year and 3.1% quarter on quarter, probably the best the industry has reported so far. Not just that, the tech segment grew at 11.1%, sustainability grew at 4%, sequential quarter on quarter constant currency. And we've had our highest set of new deal wins, 8 in number. So 150 million to 35 million plus to 25 million plus and to 310 million plus. So we believe that we have had a fairly robust quarter actually, and it is in line with what we were thinking. And we are reiterating that including IntelliSwift, we will end up on the upper end of our guidance, which is about 10% for the year.
Okay, so that inorganic contribution coming in will take the full year growth closer to 10%. That's the take coming in. But the mobility segment, if I have it right, that declined by almost 7% this quarter, and we have been reading headlines that segment is under pressure. When do you anticipate a reversal, and what's the prospect of the mobility segment now?
Yeah, so part of that is furloughs, and part of that is the auto sector being under stress. But having said that, I'd like to confirm that mobility will come back to growth quarter four onwards, and then grow well quarter one from there based on the deals we have won. In fact, I'd like to state that one of the medical deals, one of the industrial deals, and the media deal were won based on our GenAI solutions, and the deal that we have won in automotive has been based on our iDrive, LTTS iDrive solution. So we will continue to see wins and growth based on the technology assets that we have built for the company.
All right. Hi, Mr. Chadda. Very good morning. And if we see your numbers as far as the geography-wise performance is concerned, let's talk about North America then in particular. Are you expecting a V-shaped recovery post-Trump swearing in?
We are expecting FY26 overall to be a better year than FY25. So if you take FY25 at 10%, you will see FY26 coming in higher than that. We are seeing a robust pipeline. We are seeing a number of large deals in play, and across all the segments. Demand is improving, and GenAI spends are up, software-defined everything spends are up. Industrial automation spends are coming up. So we do expect that next year will be a better year for the industry as compared to the current year.
Right. Okay. The other thing I also wanted to understand, basis your FY25 guidance, which is now near about 10% constant currency versus 8 to 10% earlier, we've now a positive read-through for Q4, implying a 5% plus kind of organic growth in Q4. What makes you so confident about it?
Has to be, we don't give quarterly guidance, but has to be if you look at the back calculations.
Okay, and FY26 expected to be better than 25. We get that, but if you can just quantify this for us, because we understand it's too early to give a number, but if you can just quantify whether visibility is much higher for FY26.
So I would request you to allow me a little more time as we go through the year to provide that in April to you. I would like to reiterate our guidance, our medium-term outlook to get to $2 billion and 17 to 18% EBIT. We hold to that, and we will continue to work forward.
Yeah, so you are maintaining your long-term targets, but you mentioned about the 8 large deals in Q3. How's the deal win momentum in Q4 so far, and are we seeing an increase in the Gen AI-led deals?
Yes, so this has been the highest amount of large deal wins we've had so far in the last few quarters, and we expect this to continue as we go into quarter four as well as hold for FY26, hopefully. Of course, there's work to be done, a lot of heavy lifting to be done. But I do know that the clients have a lot of confidence in us. We do see a certainty, if I may, And with the differentiated solutions that we have in the team, I do believe that we will be able to make positive strides as we go along.
The margins then, because your margins did expand to like 15.9% in Q3. So help us understand what are some of the other levers that you are looking out for this time which could help fuel your margin expansion going forward?
So next quarter margins will continue to trend upwards, and I do expect it to improve over a period of time. See, we still have the pyramid to play with that we will work on. We will need to continue to leverage our utilization, as well as the big thing is leveraging automation and Gen AI to be able to continue to deliver revenues without increasing too much of headcount. Having said that, we are on track to add 2,000 freshers in FY26 in the company. So all of that in play as we move forward. A lot of work to be done, but exciting times ahead.
Right. Amit, and lastly, wanted to understand about the workforce addition, itself. Any H-1B visa-related troubles that you can foresee right now?
So we are a global company, global yet local. We continue to hire locally in the US, locally in Europe, and locally in Japan. We will continue to do that. Of course, we will continue to comply to local laws, regulations, and I think we should be fine.
Okay, on that note, Mr. Chadha, we let you go. Appreciate you making time and speaking with us. That stock doing rather well on account of that confidence that you see from the management. But the overall market too has been holding on to the greens today. So a good day perhaps for a lot of these companies to be reacting to their earnings.
If you like this video, then like, share and subscribe to ET Now.